Hi, I'm Scot Mentzer with Orchard Hill Mortgage, and I want to welcome you to the Mortgage Update. Today I'm going to bring to you the forecast for the week of October 19th, 2022. And let's just get right into the rate forecast. So you shouldn't expect any significant improvement this week. Though rates could hold steady, but again, really no significant improvement. And the reason for that is the Fed is expected to raise their policy rate 0.75% in November and December, and that's really a big factor on mortgage bonds and the economy in general. And because of the Fed increasing their rates, we really shouldn't expect rates to fall back much from here. So no great improvement. So what's affecting rates? There's some economic data coming out this week. One is the housing report, which will show housing starts and existing home sales. And then we'll also have coming out on Thursday, the 20th of October, we have the jobless reports. And that will again be a big factor on the economy. Some other major factors that are really influencing the U.S. bond market and our markets in general is the UK has appointed a new finance minister and he has done a reversal on the economic plan that was introduced a few weeks ago, and doing a reversal also on their tax cuts. That kind of had a little bit of a benefit on our rates, but again, today the UK inflation report came out and it was in the double digits, and that is really what brought our rates down, or brought the bond market down, but our rates up. And the Central Bank of England is going to really have to do some strategic planning and probably take some tough measures to combat that inflation, which will again affect our markets here. So what's some advice for buyers? And still we are in a good real estate market. It's probably moved to a better market for buyers, not as competitive for them. So it's a good time for them to buy now. They can consider refinancing later. Most economic indicators are showing that we could have lower rates in the end of 2023, 2024. Again, I don't have a crystal ball, but it's what people are saying. So if rates do go down and someone went into a mortgage for a home purchase at a higher rate, they could refinance in the next year or so. Another option for our buyers right now is something called a 2-1 buy down. And what this is the buyer pays 2% less of the market interest rate the first year, and then they pay 1% less the second year. So what is this? If they, the market rate for them might be 6.5%, they, for their first year, would pay 4.5%, and then in the second year, pay 5.5%. And the way this would work is if that difference from 6.5% to 4.5% was $100 per month, they would multiply that by 12. So $1,200, and the second year, since it's 1% less, it would be $50. $50 times 12 would be $600. So $2,100, if I'm doing my math right, would go into an escrow account. The mortgage rate would still be at 6.5%, but the borrower would pay their payment based on 4.5%. The difference would come from the escrow account. It does need to be a seller concession, but it's a better way than buying down points, because to go from 6.5 to 4.5 by buying down the rate might cost $15,000 to $20,000 depending on the size of the mortgage. So this is a great way for the buyer to get a lower payment for the first 2 years. It does have to be a seller concession. And then, in 2 years, they could refinance. They don't have to, but in the third year, they are going to pay the higher rate, which is the market rate. So in this example, I had said 6.5%. So their mortgage would go up. And, that amount is going to be based on how much their mortgage is. Not the purchase price, but the mortgage amount. So it's a great way, again, for our buyers to get a lower payment, get them into a home, and then if they want in 2 years, they could refinance, or whenever rates go down. And if they did refinance in a year, let's just say this time next year, interest rates are lower by, say, 2 percentage points, then they could refinance whatever was left in that escrow account for the buy down. It's a special escrow account. It's separate from their escrow account to pay their taxes and insurance. They would get that back. It would, be a part of their payment they would get out of their escrow account. So it's really a great deal for our buyers. If you have questions, please give me a call, or have your buyers give me a call, and I can walk them through the process of the 2-1 buy down, or I can talk to them or you about anything that's going on in the mortgage market right now. All right, thanks. Have a great day. Again, Scot Mentzer with Orchard Hill Mortgage.